Yeah, hello everyone. Good morning, good afternoon, and good evening to you guys. It's been long. I did a video on my YouTube channel. It's been very long, and I sincerely, should I say, I apologize for it, right? So I sincerely apologize for that. It's been a very long time, right? So I sincerely apologize for that. So today I've come with another video now, and you are definitely going to learn a lot from this video. It's going to be a recap, and also I'll be talking about market alignment, right? How you could align your time frames together, and so that you can get that particular entries you are actually looking for. First of all, you have to have an expectation first. You need to have an expectation before the execution comes in, right? So that is the first thing you need to have. So how you can align the market, align all your time frames together and get an entry, right? So that's basically what we'll be doing today. It's a recap. It's going to be a recap on USD card, right? A recap of what price did last week on USD card. So what I just want you guys to help me do is just to, once I drop this video, once you see this video, I would need you to help me like this video, right? And also share these videos to those guys you really know that they need this something like this and information like this, because this video is really going to bless you a lot and it's going to be a stepping stone for you, right? So, and I will also like you to also subscribe to my YouTube channel, and also I'll be dropping my Telegram link on the comment section, and I'll also like you to click on the link and join my Telegram channel. You are going to learn a lot from my Telegram. I drop a lot of outlook there, right? So I drop a lot of things there. We also do some learnings there too. I could just decide and maybe like teach you, right? So you'll be much more closer to me on my Telegram than YouTube. Are you getting it now? So it's going to be a recap on USD card, and it's going to be a great one, right? So let's dive into what we have today. Let's dive into what we have today, right? So basically, you all know how I've actually not thought about bias on my Telegram channel, but I'll teach about it. I'm going to teach about it, but it's not going to be today. But I'll talk a little bit about bias. Basically, market alignment. You get market alignment. Also, you can also call it. It can also be bias too, right? It can also be your bias, or how you could also build your storyline. Although there are steps you should follow. I'll be mentioning some of those steps here, right? I'll be mentioning some of them here. And also I'll teach about entries. I'll talk a little bit about entries. I might not come out plain, but if you are very wise, you are going to catch it, right? You're going to catch it. So what we actually do I do is that I go on the higher time frames. Then is either I'm looking for rejections, right? I'm looking for rejections. Let's say maybe on the weekly time frames, I'm looking for rejections in the higher time frames, which is the weekly time frame. I'm looking for rejection from a weekly key level, right? So I'm looking for rejection, not just rejection, and closure too. Rejection, as much as rejection is important, closure is also very paramount, right? So I'm looking for price, rejecting. I don't know, right? But because it's going to take a lot of time. So let's say this particular horizontal ray. Let's say price. I want to see price on the weekly time frame. If I'm building my bias, if I'm actually building my bias from the weekly time frame, right? I want to see price reject from, let's say this horizontal ray is my weekly key level. So what I want to see is that price should, this color is not that bright, but it's still okay. Let me increase the opacity. Okay, something like this. So on the weekly time frame, what I want to see is that price should reject from a weekly key level, right, and give me a closure. Let's say something like this. Price rejects from this particular weekly key level, then give me a closure from that same weekly key level. I want to see a rejection, and I want to see price close below that key level. If price closes above a key level, we don't want, if we are actually looking for sales, we don't want to look for sales, right? We don't want to look for sales. What if we are looking for sales? We want to see price reject from a key level and close below that particular key level. So that's the first thing I do. I look out for when I am building my bias, right? So we use two types of there are two ways we build bias. There are two ways I build my bias. Number one, I use key levels to build bias. Then number two, I use liquidity, or it's called single candle liquidity. I use single candle to also build bias, or it's also called maybe CRT. Are you getting it now? So these are the two ways I build my bias. Number one, key levels. Then number two, single candle liquidity, single candle formation, something like that. You get. But what I'm talking about right now is using key levels, right? So on the weekly, I want to see something like this. I want to see a weekly candle reject from a weekly key level and give me a closure. Then I drop one time frame lower, which is my daily time frame. The reason why I'm dropping one time frame lower is because the daily is what is going to confirm my weekly rejections. Are you getting it now? So my daily, I want to see a daily breakout, right? I want to see a daily breakout. In this case, it can be an external breakout or an internal breakout. Are you getting it now? But an external breakout is more, should I say, it's more, I don't know the word to use. If price gives you an external breakout, it's telling you that the direction of that particular trend is actually changing, right? So an external breakout is just telling you that price is going to be, the direction is breaking out to is going to be for long, like that direction is going to be. So on the daily time frame, I want my daily time frame to help me confirm what the weekly is showing me. Weekly is showing me rejection and closure. So I want to see something. I want to see price do something like this on the daily time frame. I'm coming. So it's two things. It's either I see something like this. Price trending creates this particular V-shaped key level, then maybe taps into a key level, right? Something like this, taps into a key level, right? So the last V-shaped price created, right? So I want to see something like this. Number one, I want to see something like this. Are you getting it? So I want to see something like this. It's either I see something like this, which is a sweep and a break, right, on the daily time frame, or the most recent breakout to the downside on the daily time frame. Basically, this is what I'm looking out for in the other time frames to confirm themselves. So it's either I see a sweep of this level and a break to the downside, or I see the most recent breakout from this same key level, right? Or I see the most recent breakout, something like this, most recent breakout to the downside. The truth is that what I like to see, what I love most or what I love more is this particular sweep and a break, which is actually confirming external breakouts, telling me that price has broken. On the daily time frame, it has given me an external breakout because this particular level now, this sweep and this break, This break is the external breakout. You get it now. While this other most recent breakout to the downside is an internal breakout, right? This is an internal breakout to this particular level. It's an internal breakout. Basically, I move once my daily time frame has confirmed weekly bearish. I drop one time frame lower also to the 4 hours time frame. Why am I dropping one time frame lower to the 4 hours time frame? It's because I also want to confirm whether my daily is bearish, right? So my 4 hours is going to confirm my daily bearish for me, right? So on the 4 hour time frame, 4 hours time frame, I also want to see two things. Number one is a sweep and a break, which is the same thing I'm looking out for in my daily time frame. Then number two, the most recent breakouts to the downside. So my daily time frame confirms my weekly time frame, then my 4 hours time frame confirms my daily time frame, right? So this is the simple way. This is basically how I build my bias. So without wasting so much time, I want to move straight to the chart. This just take note that I'm teaching you how to build bias using key levels, right? I'm teaching you how to build bias using key levels. This is not how to build bias using liquidity. This is just using key levels, right? So this is my weekly time frame, Abi. So on the weekly time frame, what did I tell you I am looking out for? If you look at this particular chart, if you look at it, right, you will see that this most recent structure that price is creating is bullish structure. Because if we go to our line chart, you see that the most recent breakout on the weekly time frame is to the upside, right? But why did I expect that sales to come in? If you look at what price is doing here, let's mark out this open close key level that price reacted from, this particular weekly open close key level, you discover something. What I discovered was that I saw that on the weekly time frame, the first candle on the weekly time frame rejected that particular key level, an open close key level, right? This is a bearish open close key level. Two consecutive candles to the downside creates an open close, which is also a key level, right? So the first candle that price created went into it, then what we saw was a burnout. The candle just burnt down and came back down again. So the candle just wicked from that key level and gave a closure. That was the first thing. That was the first candle that tapped into the key level, right? So the second candle also came there also and wicked out from that key level, right? So this already has given me something on the weekly time frame. Then the next thing I was expecting was a breakout on the daily. It's either price gives me a sweep and a break to the downside on the daily time frame, or price gives me the most recent breakout to the downside. So what did price give to me right here? Let's move one time frame lower to the daily. Okay, so on the daily, this level is still the weekly level. What the price do on the daily time frame? Let's go to line chart. You could see what price did, right? What did price do? Price swept this particular high and gave a break to the downside. Although this particular sweep and break was an internal break, right? It was an internal break because what price did, I'm coming, let me show you something. You could see that price already tapped. So where our external break is going to come from is this particular last V shape, key level, right? So if you have the patience to wait for this daily last V-shaped key level to be broken, you could actually wait. But for those that does not have the patience to wait, you could use this, right? You could use this. So what the price do on the daily time frame? What price did was that price gave this first break, most recent breakout. This was the first most recent breakout price did. Although this other level is also a breakout level on the daily time frame. This is also a breakout level on the daily time frame. Let's go back to our candle chart, right? So this particular daily break has confirmed to us, right? It has confirmed to us that daily has aligned with the weekly time frame, that the weekly breakout is confirmed now, right? So the daily breakout, the daily most recent breakout to the downside has confirmed weekly rejections. Are you getting it now, right? So it has confirmed the weekly rejection. If you see what price is doing, I like to look at the days. The days price maybe swept a high, rejected from a key level. I like to look at the days. If you see what price did after this particular break, price came in on the daily time frame. But although this is a topic for another day, this is a topic for another day. Inside here, we still have how to build bias or storyline using liquidity or single candle formation, right? So our daily has given us the most recent breakout to the downside, right? So what we are now expecting is for our 4 hours to align with our daily and our weekly time frame, right? So if we move one time frame lower to our 4 hours, you could see that this was where the daily breakout happened. Then after price came back to that weekly level, what we saw on the 4 hours time frame was this breakout. First of all, there was a small tiny breakout here. Then second of all, we got another breakout from this particular level, right? Got another breakout from that particular level. So by price giving us all these things, we can now say that we are bearish, although the we've not gotten an external breakout. We've not gotten an external breakout yet. What we saw on the daily time frame was an internal breakout, which is the most recent breakout to the downside. So we've not gotten an external breakout yet, because an external breakout is going to confirm to us that that weekly direction is going to be for long. Are you getting it now? So our weekly is bearish, our daily is bearish, our 4 hours is bearish. What are you now looking out for now? What we are now looking out for is our entries, right? Is our entries. If you want to look for your entries, you play with your 2 hours time frame, you play with your 1 hours time frame, and you also play with your 30 minutes time frame. You could also play with your 15 minutes time frame. Depends on what you are so convenient with, right? So, but for me, I checked the 2 hours time frame, right? I checked the 2 hours time frame. You could see that this particular key level on the 4 hours time frame, it is overlapping also on the 2 hours time frame, right? So there's an overlapping key level between the H4 time frame and the H2 time frame. If you drop to your 1 hour 2, you see that that particular level is also a key level on the 1 hour time frame. So our 4 hours, our 2 hours, and our H1, which is our 1 hour's time frame, are overlapping with each other. So that is telling us that we could actually take that trade directly from our 4 hours breakouts, right? So if we put your entries from here, if you take your entry from this particular level, so your first entry can actually be from here. then your stop loss a little bit above this particular high, 6 pip stop loss. Then our target is going to be either this low or below that level, right? Or this other level here, right? So that was our first entry. That was the first entry that presented itself on USD card, right? That's the first entry that presented itself. So take note that our direction is confirmed. So what you need to understand is that once your direction is confirmed, as long as it has not crossed to the other day, you should be considering, when you are looking out for levels to take re-entries from, like levels you want to maybe add another entry from, you should always look out for your 4 hours breakout. So if we go back to our 4 hours time frame, you would see something that price did. This was our first 4 hours internal breakout. Then price gave us on the line chart. Let's go back to the line chart. You see that price gave us a new breakout on the 4 hours time frame, right? A new breakout on the 4 hours time frame. So this is the breakout on the 4 hours time frame. Let's go back to a candle chart. So price tapped into the key level, into this 4 hours key level. You could see that price there was a third candle rejection on this particular breakout on the 4 hours time frame, a third candle rejection, which makes this level a very powerful key level, right? So that's actually made this level a powerful level. So if you want to get your first entry, if you want to enter directly from this key level, it is still good. It's still good for you to enter from this key level and target the lows, right? You target either maybe this low, right? If you want to enter from this particular most recent 4 hours break, you could enter from there and also target the low. But I want to show you one confirmation entry that presented itself that you should never use. You should never joke with this confirmation entry. First of all, price has tapped into a 4 hours breakout level, right? Once price taps into your 4 hours breakout level, it could be your breakout level or it could be a QM level. So once price taps into it, you start scanning different time frames. You start scanning. Why are you scanning? It's because you want to get an entry, right? You want to get an entry because you don't want to enter directly from that 4 hours breakout level. You want to get an entry. Are you getting it now? I literally didn't see anything here. H1. Okay. So what did H1 give us? What did H1 give us? This was something very, very sweet. It was sweet. So after price tapped here, tapped on this particular 4 hours breakout, that's our 4 hours breakout level. After price tapped on that level, what we saw 1 hour give to us was a sweep of liquidity and a break of structure. A sweep of liquidity and a break. 1 hour give us a sweep of liquidity and a break. Once again, advanced market structure. This is advanced market structure. If you go back to the advanced market structure, I have that on my YouTube. I did a video on that already. Advanced market structure. If you go back to that video, you are going to learn a lot from it. What advanced market structure is just telling us is that it's just telling us about manipulation, right? It's just telling us about how price, maybe something like this, price just manipulates this high, which is sweeping the high, then gives us a break of structure, right? So after the break of structure, the first pullback is usually what? The liquidity. So advanced market structure is telling us to wait for price to return back to any key level at the top, which is, this is the break. The first pullback is inducement or liquidity, right? So advanced market structure is telling us that it's either price will return back to this shoulder level or price will come back to this head level. So advanced market structure is telling us that it's either we get price to come react from this shoulder level, which is also a QM level, or we wait for price to come back to this level. It all depends on what price wants to do at that particular time, right? So the confirmation entry we got here was an advanced market structure on our 1 hours time frame. If we go back to the line chart, on to the candle chart, you see what price did. So what price did was that this particular QM level, price tapped into it. That was a confirmation entry, right? So if I want to take this, my entry is going to be from here. Then probably my stop loss, I love to put my stop loss a little bit above this particular QM level, the wick it's created. So I love to put my SL above. So but this level is a level we don't expect price to come to. So we usually call this level a strong high, right? So it's either your stop loss is at this level or your stop loss is a little bit above this wick here, right? So something like this, then you target same level you are targeting for that particular level, right? So you could see using building our storyline to down to entries, you could see what we've been able to actualize, what we've been able to get, right? We've prioritized this bias, singular bias that we had. We've prioritized it and we've maximized this to our own advantage, getting 3 entries now, right? So this was the first entry. This particular level was the second entry, and this one we are in now, which is this confirmation entry, is also is the third entry. Then the fourth entry that presented itself was actually from also, I think, from the 4 hours, right? So what price did was that price broke out on the 4 hours time frame. Price gave us another breakout to the downside. You could see what I've been doing. So you are actually navigating the H4 time frame, right? Because you've already gotten your bias. You've gotten your target level also. You've gotten your bias. You've gotten your target level. What you want to see price do is that you want to see price move from your entry down to your target. So you've gotten an expectation. You are now looking for ways you could execute, right? So once your expectation is not met yet, or let's say once your target is not met yet, you will be looking out for different entries, navigating in between the 4 hours, the H2, right, and the H1. You could be looking out for more entries, more setups, right? So from our H4 time frame, we got the most recent break to the downside, and what price did was that price came back to this particular, after the breakout, price came back to this particular A-shaped key level. Although I don't like to use this particular confirmation that presented itself. Let's say we didn't take it directly from this particular A-shaped key level, because you wouldn't know where price was going to react from. But even though you used this breakout level as an entry, as long as your stop loss is around this particular wick, you wouldn't have been stopped out, right? But if we want to maximize this particular setup, if we took it from either this level or this level, our risks to reward will be very, very small. It will be minimal. All right. But if we use confirmation entry, our risk to reward will be very, very big. So what price did on the H2 time frame was price gave us a break to the downside. There was a break at this particular level, right? There was a break at that level, and on the H1 time frame, price tapped into this our A-shaped key level again. This time it created a single candle here. This candle here is a single candle liquidity. What H1 did was that H1 swept the high of that particular candle. If you drop down to your 30 minutes, you'll see what price did. Price created on the 30 minutes also, price swept a 30 minutes high and created an A-shaped key level from this particular level here. This is an A-shaped key level, right? If you check our line chart, you'll see that it's an A-shaped key level. So what did price do? Price tapped into that key level and dropped down to our target. So this was the confirmation entry that presented itself after that H4 candle tapped into that A-shaped key level, right? So our entry would have been from this place, then our stop loss maybe this high or a little bit above that high. Our take profit, same level we are targeting. So this is a 4RR trade. So if you check all the trades we've caught, you know, it's still one bias that we've been using. Weekly rejection and weekly closure, daily most recent breakout, 4 hours most recent breakout. You could see all this time frame aligned with themselves. Then we started looking out for more entries after every 4 hours breakouts. Are you getting it now? So this is how you could maximize your setup using your storyline, right? Using bias, right? So I think this is very, very simple. You could see this particular, the first one was 10R. That was our first entry. If we had taken an entry from here, this would have been the second. Then this is the third entry. Then the first tap here on the 4 hours time frame was the fourth, and the last one, which is from the 30 minutes, was the fifth entry. So price gave 5 entries. And also I like to check out for the days that price tapped into that level, because there are some days I don't trade, right? Like for Mondays now, I don't trade on Mondays because I like price to give me a confirmation of the direction it's going to before I start trading, right? So this is how simple it is. How you could use market alignment, how you could also build your bias, and I also talked a little bit about entries. I hope you guys learned from this video. So I'll see you and I'll catch you on the next video. Bye guys. Take care.